Samit Vartak joins us now. Let's take the conversation forward. Samit, fantastic to have you back and thank you for joining us. Now, I'll start with the direct line of questioning, which is, let's talk about not the market, let's talk about this pocket where you specialize and where you invest. Semi-large cap and mid-cap stocks. Those stocks are getting beaten down left, right and center. So how are you handling the market heat right now?
So I think what's changed over the last 1 year is there is a huge differentiation between the non-large cap universe itself. So if you look at the index level, say in FY20, the small cap was down almost 46%. Even last 12 months, small cap was down 36%. And we also have our small micro cap portfolio, which was only down 4%. And it's not just us. I'm sure there will be a lot of, if you are a good stock picker, it's possible. And the performance of good small and mid-cap stocks over the last 1 year has beaten even the Nifty stocks. So I think there is a big differentiation between the overall index, which is possible now, versus what was happening, say, in FY19, where the entire mid-cap and small cap was just falling like a pack of cards, mainly because of the technical issues, which we have spoken about before. So I think that's a good sign that the stock picking is at least back in reckoning, rather than just more macro kind of investing.
Samit, but my question is that right now the bent of the market is such that people are only talking about large caps. The general view is that 2-3 private banks will survive. 2-3 consumer companies, 4-5 consumer companies is where you will see large migration. Mid-cap companies which have high cost of capital, high cost of borrowing, high cost of doing business are going to find it extremely painful to survive or even to business. And that is what I think markets are worried about. The markets are telling you that, look, stick to mega caps, stick to large caps and stick to leaders rather than mid-cap niche players.
Yes, you're right. I'm just in mid of doing an analysis of the entire. I think the biggest problem has been the credit cycle. There is no growth in credit. If you look at the correlation between the growth in credit and then the top line growth of companies of the corporate India, it's almost 1:1. The credit growth, which used to be, in FY12, a 5-year credit growth CAGR used to be in 20s, and then the sales growth also was around that level. Now the credit growth has dropped to almost 7.5%. And same is the case with the sales growth. Last 5 years sales growth is barely 7.5%. The profit growth is even lower. And there is no sign of the credit growth picking up, because for credit growth, you got to look at the banking side. If you look at the banking positioning today, the gross NPA divided by the equity, is almost 80%, which is at the highest level. And this was from last year. Imagine the incremental gross NPAs which will arise from this crisis. And if your gross NPAs are above your equity level, where is the room for lending? And that's the problem. And at the same time, your gross NPAs to the advances is also at 11%. This is last year. It will probably go up now. So until this credit growth comes back, I think the narrow nature of the market is going to continue. It's impossible for smaller, weaker companies to get credit. And without credit, it's like fuel, right? If you don't have fuel in your car can't run, whether you have a Ferrari or anyone. So I think that's been the problem, and I'm not sure how and when the government has to intervene. It's not going to solve itself. Such a large problem where the gross NPAs are in double digits is not going to vanish by itself. So I think it's important that the government takes some steps. And it can't be done by just putting in equity. You will have to open up the economy. You will have to invite new investments into the company, and that's the only way I think you can revive the economy, and only reviving the economy is going to solve the problem. not by fixing just the banking system.
So, absolutely. So, Samit, in that sense, when nothing's really been done to stimulate consumption or the demand side, so to speak, do you really see the likelihood of a recovery once we do start to see we've already started a partial lifting in parts of the country, but when we actually see a resumption of economic activity?
We are not that strong financially. Our fiscal is pretty weak. If you look at our fiscal deficit with state-owned and then the state level as well as the central level, it's pretty high. So the only stimulus which is going to work is by opening up the economy. I mean, we can't afford. I mean, the richest of nations can't afford the lockdown. Same is the case with us. I mean, it's much, much worse. And especially given that our banking system was already in a crisis, it makes it even precarious. So I think I don't know whether if there is any solution to opening up the economy. We will have to open up. We will have to take precautions, and that is the only stimulus which is going to work. Government can spend 5% of GDP or 8% of GDP. It's not going to matter if you keep the economy locked down. It's just going to vanish in a matter of few months. So if the economy is practically unlocked, I think there are high chances that we will probably come back to the normal growth pretty quickly, other than maybe few sectors. But overall, the economic activity has to pick up. Given the finances and the poor nature of our country, we can't afford locking the economy further.
Yeah, and we're already in lockdown 4.0 now, Samit. So wonder how long this is really going to stretch because of the kind of strain that it is, putting on a lot of companies as well as job losses. Just about a month ago, you put out a tweet talking about when one loses 30, 40, 50% in their portfolio value, you get that sinking feeling of being set back by years. Now as well, we're seeing a situation of dominant volatility, and the question is that the future just looks ever so uncertain. So what is the advice when it comes to picking out some of those mid caps as well at a time like this? There have been some that have been a bit more prone to the volatility and have not really borne the brunt of it. So what's the advice that you're giving to investors at a time like this?
Yes, I think we have to be cognizant of the perception that we have in mind. Just imagine 5 years ago, when the Modi 1.0 government had come in, the kind of euphoria everyone had, the kind of expectations, and who would have imagined that 5 years down the line we'll be in such a position. So generally, what we think very, very rarely plays out. I think it's always better for investments to start in such a bleak environment where everyone thinks that next 5 years are going to be horrendous. And I think that's the advantage that you have to start with, because the valuations are probably less than half of what you got 5 years back in the mid cap and small cap space. Today, the problem is the large cap space is pretty expensive. If you look at the top 100 stocks, the P multiple is 28 times. If you look at the stocks which are beyond 250, the median multiple is around 12 times. So it's almost 60% discount that you're getting, which is one of the highest discounts in the last couple of decades. And if you are starting at that kind of level, there are many mid-cap and small-cap companies which will be able to double their earnings in the next 3 to 4 years. And it's not that difficult to find. And if your earnings are going to double in the next 3 to 4 years, I'm pretty sure the earnings multiple also will double. So there are possibilities where there are good quality mid and small caps, which will be 3 to 4x in the next 3 to 4 years. I know it seems very, very optimistic at this point, but that's how things work. When you give up on everything, that's when the desperation comes in. That's when government is forced to act, and the valuation generally in these bleak times are reflective of the expectations of the people, and that's generally how you make good of it.
Sumit, that's how markets have always followed, but some would argue that this is not a normal time. Medical crisis, lower interest rates, complete crunch happening in the mid and the small cap space. Unlike 2008, where the appetite towards risk had not died. Right now, the appetite towards risk has died. One. Second, let's say if mid and small cap stocks will have to come back, then where are you picking your spots? Because in the new world now, everybody is trying to become more digital, more work at home. Very few manufacturing companies have the mid-cap manufacturing companies have the scale and size to go higher. So where are you putting your bets in the mid-cap space with the assumption that next 3, 4, 5 years you will get outsized gainers?
Right. So I think mid-cap, small-cap space, which I've spoken a lot about, one is chemical space, because I think irrespective of whether pharma plays out the way we think it is, there is agrochemical side, there are multiple industries to which they cater to, and assuming that even 10% possibility of more supply chain diversification away from China, it's not a trend which is going to which is triggered by this crisis. It's a trend which started almost 12 years back, and which is going to continue. It's very small industry, so that pocket is going to work. The contract manufacturing, we are only a couple of players in India, whether the contract manufacturing in white goods or electronics, I think that's something which definitely is going to work. Third space, as you said, telecom, unfortunately, we don't have too many ways to play that space, and most are playing it through just the two telecom players. But a theme which, didn't work for me, I mean, at least stock price perspective, is the ancillary play, where they help build the network. There are not many companies. I can only think of one, but at least the network quality will have to improve across the world. There is preponement of spend of telecom. In the UK, they're trying to prepone their 5G rollout by 2025 versus 2030. Same thing is happening in China. Across the world, I think that will be a trend, because that will be the most efficient capital allocation that you can do, as you are going to save cost. I mean, you saw what TCS said, or multiple companies have announced more and more work from home, and it will result in cost cutting, and that kind of cost cutting will definitely help spend more money on improving your network capability. So I think that's a space where you need to keep your eyes open. What are the different ways? You probably have to think of not just the first level, but second, third level of investment ideas, and you can make, I think, significant amount of money if you end up finding an opportunity out there. And again, it's very difficult to preempt anything. The only thing that you can do when a new trend starts is to just keep your eyes open, read about global trends, and just be watchful. You will never be able to predict. You may predict based on the first level criteria, but generally that doesn't work out. Let the trend start. You might be late for 6 months, because if there is a real trend which starts, it doesn't end in a couple of years. It lasts for the entire cycle. So even if you are late by 5-6 months, it's fine. I mean, in 2009, Bajaj Finance, even though I identified Bajaj Finance at that time, even if you entered Bajaj Finance by 2011-12, it was not too late at all. I mean, even from that point, you made probably 25 times money. So that's a possibility even now. You just have to be patient and watchful.
Can you tell me a trend like this now, where you think that it could be called as a mega trend? I'm not talking about a stock idea, but can you tell me a trend? Because like you said, Bajaj Finance. Now Bajaj Finance also went higher, and other NBFCs also went higher. Before IL&FS, NBFC was the go-to space for everybody. So what is the next big thing coming where you would say that not one, but all who are in that space will make money?
I think contract manufacturing is going to be that trend. So contract manufacturing can be, seen in terms of electronics, white goods, and I'm sure there will be more and more contract manufacturing players which will come. It could be in pharma, chemical side. Again, there we have a couple of players on that side and a couple of players on the white goods and electronic side. But other than that trend, see, somehow I feel India doesn't have any option but to invite more and more industries into the country. Government doesn't have any option. It will happen by force or by their willingness, but it will happen. And in that scenario, I think companies which are really high quality, it could be mid cap, small cap, which are part of the building material, where there is not too much of competition. I think those could have a huge mega trend, because once you start building factories, there are certain categories within building material where it's a pure commodity. There are too many players, but there are certain categories where there are a handful of players and one or two are dominant leaders and they have the capacity. Those kind of companies, I think, could do phenomenally well over the next 5 years.
All right, fair enough. Samit, in terms of what we should anticipate, from markets this year, and I know there's a lot of uncertainty, so it's difficult to predict. But do you see us heading back towards 2020 lows? Do you see, a need for a strategy that addresses that scenario versus one that's looking for some kind of potential returns in this environment?
Yeah, unfortunately, I think that's a pretty high likelihood. Given the valuations for the large cap space and given the, I think, economic scenario that we are into, as well as given what's the positioning of the banking sector, that's completely likely. I mean, imagine that 28 times kind of a multiple for the median multiple for the top 100 goes down to even 20 times. That's a pretty 20-25% kind of a drop from these levels, and that's easily possible. So it's something which I would say more likely than reaching the 12,000 level, unless we find a vaccine or a complete cure which is applicable to the entire mass, and then the sentiments change and people start looking forward. But I think given the current scenario, it's very difficult to look much forward. People will be more risk averse, and whenever there is a hope kind of a rally, there will be profit booking, which we are anyways experiencing.
Right, Samit, just wanted to also get in your take as to how you're positioning yourself, or what the advice is when it comes to the wide gamut of financials, because we tend to see that this sector takes quite a beating when there is that stark underperformance that's witnessed in the markets. If we had to look at the insurance space, NBFCs, some of the blue chip private bank names, as well as the PSUs, where is it that you're finding the most comfort?
So, see, I am not in the short run that bullish on the financial sector, but one thing is for sure, finance is the only sector which has been one of the biggest wealth creators in all the last three cycles. So whether it's the infrastructure cycle of the early 2000s or the post-financial crisis short-term boom that we had, or the recent boom that we had from 2013-14 onwards. And so India cannot grow. As I said, there is a huge linkage between the credit cycle growth and then the sales growth. So if India or even the market has to do well, the financials have to do well. Now, which financials have contributed across the cycles are the private banks. So private banks definitely have to do well, because the PSU banks are going to get weaker. It's almost a no-brainer. NBFCs are something which go through boom and bust cycles. So it's an extremely risky bet across multiple cycles. You got to see how, in the first crisis how that entity comes out. So even if it's the best entity in the country, I can't rest assured that they will come out unscathed or they can survive such a large crisis, which generally the top banks will. And as you said, I am really positive on the non-lending finance business, whether it's the asset management business or the insurance business. I think those kind of businesses, because there are very few profitable players out there, and they will get more dominant over the years. So that's a theme which is definitely going to play out. If I had to play a lending NBFC, then I would probably bet more on the gold finance, because I think gold.
All right, Samit, really appreciate your time. Glad you could join us. Markets, meanwhile, the morning gains are gone completely. That's the problem. I mean, the selling in financials is just breaking the back of the market right now. Where is it? Fear or over ownership?